Assalamu alaikum everybody. Welcome back to my channel Rapid Revision. Today's topic is petty cash books and we're trying to solve a question from the past papers. This question is from February March 2020. This was paper 2 variant 2. This was an Indian variant of the exam and it's question number 1. The question here says Amara maintains a petty cash book using the Impress system. So I told you guys that the Impress system is that system in which we have some amount that is kept as a float. So let's say we are going to restore this every Monday, for example. I gave this example to you. Here the impressed amount is $200 and is restored on the first day of each month. So the period here is a month. So Amara basically gives $200 to her junior member of staff every on the first day of each month. On 1st January 2020, Amara had a balance of 65 in her petty cash, which means that we have $65 and now we need to restore this balance and make it to 200 again. So if we have $65 already in the petty cash book, what we need to do is that we need to add $135 more in order to make it $200, because 200 minus 65 is 135. So we'll add $135 more in the petty cash from the cash book. So we'll use the cash book and we will use the bank account. Depends. Yeah, so here we are going to restore the petty cash through the business bank account. So that will be an entry in your petty cash book. But what they're saying here is all payments of less than $100 are made from petty cash. On 1st January 2020, Amara owed $85 to Razvan, a credit supplier. So this person is your trade payable, and Amara is basically on the first day of the month, that is 1st January 2020, Amara owes Razvan $85. So that means Amara has to pay Razvan $85. Then they're saying Amara provided the following information for January 2020. The petty cash impressed was restored from the business bank account. Okay, you need to record this in the petty cash book. So what I'll do is that I'll keep recording the transactions here in Amara's petty cash book. And if you guys look here, petty cash book is actually a T account. So there is a debit side of the petty cash book and there is a credit side as well. So this total received is the debit side of the petty cash and total paid is the credit side of the petty cash. And these columns, travel, postage and stationery and ledger accounts, these are called analysis columns. So we just have one side for details. We just have one column for details, one column for date, but actually it's a T account. Petty cash is part of the double entry system and it's a ledger account. So what I'm going to do is that I'm going to make the petty cash. I'll start with a balance brought down. So I'll write here 1st January 2020. I'll write here balance brought down. And because this is my cash balance and this cash is a positive balance and cash is an asset, so petty cash is also an asset, this balance is going to come on the debit side, that is $65. Now I need to, on the same date 1st January 2020, I need to restore this balance. So what I'll do here is I'll write here bank and I'll write here 135. So notice that whenever money is coming in the petty cash, you need to debit the petty cash and you need to credit the against this your cash book is being credited. We are basically recording on the credit side of the cash book. In the details we'll write petty cash and this we'll write in the bank column. In the petty cash book you'll write here bank in the details, and on the debit side you'll write 135, which is what we have restored to make it $200. Now we have $200 in the petty cash. Now I'll be recording all the payments, the small cash payments that I have made from petty cash, which Amara has made from petty cash. They are saying here January 3 purchase stationery for cash $24. So I'll write here January 3, so 3rd January 2020. I'll write here stationery and I will write here $24 in the total paid section. The transaction on January 3 is purchase stationery for cash to $24. So I need to record this in my details. I'll write here stationery. I'll write here total paid $24, and in postage and stationery I need to record this as 24. So because this payment is for stationery, I record this in the analysis column of postage and stationery. Okay, the next transaction says here paid traveling expenses $49. I'll write here 7th January. I'll write here traveling expenses and I need to record this $49, and I'll write this in travel $49. Then they're saying here paid Razvan the amount outstanding on his account. The amount outstanding on his account was $85, and now this is, since this is less than 100, so we need to make that payment from petty cash. I'll write here this is January 14, so I'll write here 14th January. I'll write here Razvan. I'll write here 85 in total paid, and I'll write 85 in the ledger account. So notice Razvan is also a ledger account. So Razvan's account will be maintained in the purchases ledger because Razvan is our credit supplier. So in Amara's purchases ledger, we'll make the account for Razvan. And what you need to do here is basically we are using the petty cash to pay Razvan. So Razvan's account will be debited, petty cash is credited here. So that's basically the double entry here. The next transaction says here, January 19 purchase goods on credit from Razvan 200 less 10% trade discount. This is not going to be recorded in the petty cash because this is not a cash payment, or this is not a payment. This is simply that you are buying goods on credit from Razvan and we are not paying him right away because this term on credit tells me that we are not paying Razvan right away. Then we'll record the next transaction here. Paid taxi fare $18. So I'll write here January 22. So I'll write here 22nd January. I'll write here taxi fare. And I'll write here this is how many dollars? This is $18. So I'll write here 18. I'll write here 18 in the travel section because taxi is also part of travel. The next transaction says here is January 28. Returned goods to Razvan which had been purchased on 19 January, list price $40. This I'm not going to record in the petty cash because this is not a cash payment. This is simply we are returning goods to Razvan, that is purchases returns, and this will be recorded in Razvan's account, but we are not going to record this in petty cash because this is not a payment. Then I'll write here January 29. So I'll write here 29 January. I'll write here postage. We are purchasing postage for we are paying for postage $11. So I'll write here $11, and in postage and stationery again I'll write here $11. Now we are done with all the transactions that we had to record in the petty cash. So now simply the debit side total is 200, and the credit side total, I need to total the credit side 24 plus 49 plus 85 plus $18 plus $11 gives me 187, which means that I have spent $187 from the petty cash. So my balance carried down will be now 200 minus $187, which will be $13. So I'll write here $13 balance carried down. This will be 31st January, and then I will total this. Both side totals will be 200. So 200 on the credit side, 200 on the debit side. And now I will also make a balance brought down here. So I'll write here balance brought down. This will be February 1. Of course, balance brought down is on the next day. And this will come on the debit side. This is $13. Now also I have to total my analysis columns. So for travel, I have spent 49 plus $18, which is $67. For for postage and stationery, we have spent $35. 11 plus 24 is 35. For ledger accounts, we have paid Razvan $85. So the total for ledger accounts is $85. Now what we actually do is that these small cash expenses, so the travel account will be in the nominal ledger. So if you guys know, there are subdivisions of the ledger. So we have number one is sales ledger, in which we have trade receivables T accounts. Then we have purchases ledger, in which we have trade payables T accounts. Then we have cash book, in which we have bank and cash T account. And nominal ledger is where we have accounts for travel, postage, and stationery. So what we are going to do is that the total of the travel, this total $67 will be posted to the travel account. So travel is an expense. In the nominal ledger, we'll have the account for travel, and this amount $67 will be debited in the travel account because expenses are always debited. Petty cash against this is being credited, so travel account will be debited. Similarly, postage in stationery account will also be maintained in the nominal ledger, and postage in stationery account will also be debited because it's an expense and expenses are always debited. The ledger accounts the payment that we have made to Razvan. So we have done petty cash credit. Razvan's account in the purchases ledger where Razvan's account is maintained, the account will be debited by the payment that we have made. So in the next part, they are expecting you to make the account of Razvan, who is Amara's credit supplier, and they are saying make the okay. They are saying that make the account of Amara as it would appear in the ledger of Razvan. So interestingly, we need to make the account of Amara in the ledger of Razvan. So this is going to be a credit customer's account. So Amara, because is purchasing from Razvan. For Amara, Razvan is a supplier. For Razvan, Amara is going to be a customer. So Amara is a customer for Razwan. So the account of Amara balance brought down will come on the debit side because she is a trade receivable. I'll write here $85 and I'll write here 1st January 2020. And then Amara is paying Razwan through petty cash. So Razvan is also receiving cash in this case. So what they're saying here is that paid Razvan the amount outstanding on his account on 14th January. So you need to record this on the credit side. Razvan is going to be receiving money in this case. So Razvan's cash balance will increase. So when Amara is paying Razvan on January 14, she is basically using the petty cash to pay Razvan. So I'll write here petty cash and I'll write here 85. So Razvan is going to receive money in cash here and the trade receivable account. So this is basically a trade receivable account. So it reduces on the credit side and increases on the debit side. So whenever Amara is buying more goods from Razvan, for Razvan it's sales, for Amara it's purchases. But now we are thinking from the perspective of Razvan. So in the next transaction with Razvan, Amara purchased goods from Razvan on credit, 200 less 10% trade discount. But we basically, Razvan sold goods to Amara. So I'll write here sales and I'll write here 200 less 10% trade discount means that the sales is of 200 multiplied by 10% will give me $20 and 200 minus 20 will be my sales, $180. I'll write here $180. This will be January. This is January in 19. And then Amara is also returning goods to Razvan. So for Amara, that is purchases returns. For Razvan, it's sales returns. So return goods to Razvan which had been purchased on 19 January, list price $40. So if list price was 40, so 40 minus $4 will be the 10% trade discount. The sales returns will be the amount for sales returns will be $36. I'll write here sales returns. I'll write here $36. The date will be January 28. So I'll write here January 28. And now my account I should balance my account. So debit side is 85 plus 180. So I'll write here 85 plus 180 minus credit side 85 and 36. You get 144 as balance carried down on the account of Amara in the ledger of Razwan. This account is going to be maintained in the sales ledger of Razvan because Amara is a customer. I'll write here January 31 and this account will balance at $265. $265 will be our total. Balance carried down will become our balance brought down. $144. This will be 1st February 2020. In the next part, they're saying on February 2, Amara paid the balance due to Razvan. She deducted 2% cash discount. So the balance due was 144 and she also got a cash discount of 2%. So cash discounts are given and taken at the time of payment. In this case, Razvan is giving the discount to Amara and Amara is basically receiving the cash discount. So they're saying here, complete the following table by placing a tick in the correct column to show how Razvan should record this cash discount. For Razvan, this cash discount is the discount allowed. Discount allowed is an expense. So you will debit the discount allowed account and you will credit the account of Amara because when Amara is paying, and Razvan is giving her a discount. So discount allowed will be debited, Amara's account will be credited, and Amara's account will reduce because of the discount. And there will be no entry in the discount received account because Razvan is not receiving discount in this case. Razvan is giving a discount to Amara. Then they're saying Amara usually pays Razvan by cash or check. State two other methods which Amara could use to pay Razvan from her bank account. So she can use a credit transfer to pay Razwan. So credit transfer is a transfer from one account to another account. And she can also use a direct debit to pay to Razwan, because direct debit means that we instruct our bank. So Amara can instruct her bank that the bank can pay to Razwan on behalf of Amara. So that's also a way in which you can make payment to your suppliers. So that's it for this question. Thank you so much for watching.